Should you invest your money in an S&P 500 Index ETF or a total stock market index ETF? The S&P 500 Index tracks the 500 largest US listed companies like Apple, Amazon, Tesla, Coca-Cola, Pfizer, and so forth. A total stock market index fund tracks every US listed company, including every company in the S&P 500. In this video, we're going to look at VOO, which is one of the widely bought S&P 500 Index ETFs, and VTI, one of the widely bought total stock market index funds. VOO is the Vanguard 500 Index Fund and VTI is the Vanguard Total Stock Market Index Fund, both owned and managed by Vanguard. We're going to determine which one is a better investment based on several criteria. 1. Stock performance over the past 10 years, which is the primary criteria. 2. Dividend yield between VOO and VTI. 3. Expense ratio between VOO and VTI, which one costs the least to own. 4. Liquidity, how easy it is to buy and sell each, which is important but the least important factor. Let's first look at the 10-year performance of VOO and VTI. From 2012 to 2022, VOO has risen 151%, which VTI has risen 145%. If you invested $10,000 in 2012, you'd have $25,000 in 2022 if you invested in VOO, and only $24,500 if you invested in VTI. Next, let's look at dividend yield for both VOO and VTI. VOO has a dividend yield of 1.73%, while VTI also has a yield of 1.73%. That means if you have $10,000 in VOO or VTI, you'd receive about $173 per year in dividends. Third, let's look at expense ratio for VOO and VTI. Expense ratio is basically how much it costs you each year as a percentage to Vanguard for managing the fund. VOO has an expense ratio of 0.03%, while VTI has an expense ratio of 0.06%. That means if you had $10,000 invested in each, you'd be paying $3 per year with VOO and $6 with VTI. Lastly, let's look at liquidity between VOO and VTI. Liquidity has some importance because it means more people are trading it. When more people buy and sell, the price is more fair and thus you can buy it for a good price and sell it for a good price. So which fund has a better liquidity, VOO or VTI? VOO averages about 4.45 million shares traded per day, which VTI averages about 3.61 million shares traded per day. When we put everything together while weighing the differences in importance between our four criteria, VOO is a much better investment than VTI. Aside from having the same dividend yield, VOO has performed better, is less expensive to own, and is more liquid than VTI. There are plenty of other smaller factors to consider, like whether 500 companies versus the entire stock market is good diversification or not. But based on the four I talked about in this video, an S&P 500 Index ETF like VOO looks like a better place to hold your investment dollars than that of a total stock market index fund like VTI. So what are your thoughts? Do you invest in either one? Comment below. And as always, take care of your money.